Pick up the Wall Street Journal. The top 3 stories in the journal all about energy. Number 1, obviously Shell abandoning that big project. Yesterday we talked about the $7 billion Arctic oil exploration campaign. Glencore got just taken out yesterday, battering continuing. The stock was down 30%. And then you've got a deal in the energy business. I mean, there's so much activity here.
There's a lot of activity, and that's typically a sign of when a market is reaching, in this case, I think it's pinnacle of the downside. All the news you're looking at is bad oil. We're worried about the shale producers. We're worried about what Shell's doing. We're worried about Glencore. Everybody we're worried about typically signals we're very close. Now, this may not be the bottom exactly here, but this is the time that, as an investor, you look and you say, this is probably the time I want to start dipping my toe in, because all the bad news is now priced in the market, right? What else can go wrong? I mean, the dollar's at the high levels. There's a lot of reasons to believe
Or it goes better, Dagan, which is the scenario you've been laying out. The fact that we're in the fourth quarter. The end of the week will be in the fourth quarter. And maybe that savings at the gas pump will actually empower consumers.
We are a consumer-led economy. So we look at we could talk about all these nations that are reliant upon commodity prices being strong, whether it's Australia to Russia to Canada. But we're driven by U.S. consumers. So the drop in energy prices will ultimately be a benefit as we go into the winter with the drop in heating oil prices. And definitely watch, we talked about this yesterday, Saudi Arabia. They need to shore up its finances, its budget, and watch them to cut production, because that will, again, help put a floor in.
Yeah, we'll see if they actually make a move on production, because the last time we know that they didn't want to. Any impact on your business or banking in general that you see from the price of oil?
Well, falling oil prices, falling gas prices helps the consumer, and the consumer helps banking. So I think it's pretty good, positive for the United States.
I have a question for you. Do you really believe, I don't believe that the consumer is going to spend the money this Christmas. I think that if they're doing anything, they're saving the money because they're afraid or they're not making enough. I see it in where I come from. People are having trouble paying their rent. They're having trouble paying their car payment, whatever. We are a by-the-month society, right?
We are, but you've seen, but the way that retail sales have been trending in the third quarter, the way that consumer spending has been trending, it's been moving up. And there's no reason to think that this won't move down and trickle down into the broad economy. I'm not talking about off to the races.
Because we just haven't seen it yet. I'm just wondering why we haven't seen it. I mean, I know the savings rate is up at 5% now. So it's clear people have been saving money. They're afraid to actually buy those big ticket items.
Some of the big retailers attribute the strength in their business directly or partially to the drop in energy prices in this country, including Target.
Well, some of it is demographics. The baby boomers are becoming more savers now. They're not spending like they were 10, 15 years ago. And the retail is strengthening. And I think we're going to move slowly. You know, businesses aren't hiring like we used to.
Why?
Well, the lack of confidence. We're into the cost control. We're building up our liquidity. The balance sheets are stronger. And things, you know, which we're kind of getting through the last 5 years. It's been a tough go.
How about the jobs we're adding? I mean, we have jobs to try, but we have a big, we're doing such great jobs. But in the meantime, we're hiring $10 an hour workers, and we're laying off $50 an hour workers. The 5-to-1 ratio doesn't work out. I don't see where the American consumer, now again, there's certain pockets that are doing great. But overall, the broad picture, I think, does not look very good. I think there's a lot of trouble and a lot of growth. I don't see it.
Well, the growth story definitely is slowing. We've seen that from around the world. But the question is, has it slowed in the U.S.? And are we going to see any negatives from the oil story? You know, one point that I've been making is that a lot of these shale companies are over-leveraged, and they're going to have to redo their credit facilities come October, end of October, November. Does that put them out of business? Or maybe it just creates more consolidation, and we'll see more deals. We saw a big deal in energy yesterday. Maybe that's the way this plays out.
One of the more worrisome things to watch, and you hit on this, are how the credit spreads. And yesterday, Wall Street Journal story today, there were 3 bond deals that were either called off or that were pulled or modified. So again, if you have corporations that cannot access or choose not to access the credit markets, again, did we learn our lessons in 2008? That's a much bigger concern, probably. Right. And that's one of the things that sent Glencore into a death spiral. Or maybe not a death spiral,
but
an ICU spiral.
Yeah, that's for sure. They're 30% of your value cut. I'd call it that. We want to keep it simple here for you at the Fox Business Network. We're recapping the market action Monday. Stocks came off of a major sell-off with the Dow Jones Industrial Average down 312 points. Healthcare and energy were the biggest losers there. That really was the leadership on the downside. One winner in yesterday's wild swing, government debt. Take a look at this chart. From yesterday, you can see a clear flight to safety as investors sell what they saw as risky investments, like equities, and move into what they saw as safer ones, like bonds. Let's explain why this happens and why you're seeing these moves. Keep it simple, Todd. Tell us, our viewers, why yields go down when prices go up.
Actually, the stock market is considered more of a risk asset. So when you put money in the stock market, you're looking for a faster, higher return. When you go into the bond market, that's typically what we'd say, just a flight to safety. You're taking money that you know is going to be safe because if you put it in the U.S. debt, it's guaranteed, backed by the full faith and credit of the United States government. So it makes it easier for an investor to say, I want to be more conservative. I want to make sure I'm afraid of the market. And the fixed income market, which is the bond market, is the biggest market in the world.
Bottom line, Kevin, from your standpoint, do you think the Federal Reserve raises rates year end?
Has to. December.
Yeah, December is your call. Kevin, it's been great having you on the show today this morning.
Great.
Thank you so much for joining us. Kevin Cummins is the CEO of Investors Bank. We'll be right back. We've got a lot to cover on